includes, the next slide.
Go ahead.
Okay. I want to open my slide. Okay. We are going to be introducing the topic. We are going to be looking at the tax information, the insider information on the taxes that will guide on how you can reduce taxes, and then during this time that we have, and then we are going to be concluding on the matter. So for introduction, the other aspect, we are going to talk about current taxation in this crucial time. The information that we'll be sharing with us now are very, very important at this time, so that you'll be able to make your business to grow in the level that you want. Your business will grow if you have less burden of taxes to pay. That is very, 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 that is a fact. If you are having much taxes to pay, it may hamper your growth in the business. So please come with me as I share with us now some insider information on how you can reduce your tax burden legally in this current pandemic. So we are moving on. The following information are very, very crucial. The first guide that you need to know concerning how to reduce taxes in this crucial time is that you should incorporate your business as a limited liability company instead of a business name. The benefit is that you are going to have zero income tax rate for small businesses. What do you mean by this? You know, the norm in the past is that if you want to pay lesser taxes, if you want to pay minimal taxes, go for business name registration for your company. That was in the past. You have to unlearn that now and know that for you to be able to have more tax advantage, you need to register your company as a limited liability company. The reason is this: there are so many incentives for new businesses because of the government ease of doing business in Nigeria now. There are so many incentives, especially in the Finance Act that was enacted, that was effective from February 2020, whereby all limited liability companies that are just starting and those that are considered as small businesses, they are having 0% income tax rate. So they will not pay anything as income tax, they will not pay anything as education tax, no matter how much you have made as your profit or as your income in any year, as long as it does not exceed 25 million naira, you will not pay taxes. So if you're able to accumulate how much you have made in a year as revenue over time, and then by the end of the year, you found out that you have not made 25 million naira in that year, you are not going to pay any tax. But for a business name registration, you register your company as a business name, no matter how much you make, even if your revenue in a year is 2 million, even if you have 10 million revenue, you are still going to pay your taxes to the state government where your company is residing. So for a limited liability company, having a limited liability company, you are more at a tax advantage than a business name in this sense. So even if your company grows and you are beyond the level of 25 million as a limited liability company, even if it grows to the level of 100 million naira in a year, that you are making revenue of 100 million naira in a year, you are still not going to pay higher taxes. You're not going to pay the maximum taxes payable. You're going to pay 20% as your income tax on your profits. So having your business as a limited liability company now is better for business owners than as a business name. So for the second guide 2 now. So the second guide is that it should not be a service business only. Add tangible supplies to your business portfolio. The benefit is that you are going to have an ease of value-added tax recovery. If you are a business that's running only services, your input VAT, we call one thing input VAT. Input VAT is the VAT you pay on purchases. So if you are not having anything you are purchasing that will have given you an opportunity to have input VAT, which you are going to use to net off your output VAT, which is your VAT on your sales, then you may be at a disadvantage because you will pay higher taxes in form of VAT. So if you are only running a service business, you may be at disadvantage. So we are advising as a guide for you to be able to grow your business that you should also add tangible supplies. We have something that you can claim VAT input on, which will make you to have lesser taxes to pay. So for guide 3, the guide number 3 for making your business, so for having lesser taxes to pay and making your business to grow, is that if you keep records and source documents for all business related expense. This is very crucial for small businesses. Most people, when they start business, all their mind is, let me just make money. Let's do this business and make it. You have forgotten the aspect that you need to keep records so that when tax people come, you'll be able to put something before them so that you will not be at disadvantage in tax matters. For instance, I met a company recently. I met with the directors, and then when I got there, we're trying to, because they have some tax issues, we're trying to help them solve the tax issues. But our hands we found that our hands were tied, because there is even no records to prove that what the tax people have told them to pay is not correct. But if you have records to show all the expense you are making, whatever money that is leaving your business as business related, make sure you keep records of everything, no matter how small. So because if you don't have records, there will not be anything to show that what the revenue, what the tax people have brought for you as your tax payment is not correct. If you cannot, for now they said, okay, from what they have seen from their own perspective, because they have access to your bank statement, they can see how much you have in your bank. So they have seen a revenue there. They don't know what expense you have made, and they will just slam you any figure as your tax paid, as your taxes for any year they have seen. Then you will now be the one to come forward and come and defend yourself that this is not correct. This is the amount I've spent. But if you have no records to show, that means there is nothing that you cannot claim anything. You cannot say it is not true. It's not by word of mouth. It's by the records, source documents, receipts, invoices that will show that truly you have expended this amount on your business, because they want to know that you have, all those money was spent on the business, not on not a personal expense. So if you keep all records and source documents for every year that the tax people have not come and audit your records, audit your figures, you have to keep the records for those years. For any year the tax people have not come, I'm repeating that, make sure you keep the records for any year the tax people have not come to audit your books, because one day they will still come, and they have the power to go back for 6 years and ask you what you have done in the last 6 years. So if you're able to keep records, you're able to claim tax deductible expenses to reduce taxable income. So by doing that, you'll be able to reduce the taxable income, and be able to reduce your tax payable. So for guide 4, for the fourth guide, you have to issue a tax invoice before receipt and ensure your vendor tender tax invoice before payment. Make sure that on your invoice, you write it there. When you are a company that is not a small company in this case, you have grown from becoming a small company to a medium company, because a small company is the one that have a turnover, a revenue of 25 million naira and below, while a medium company is the one that have a revenue of 100 million and below. So if you are a medium company, make sure that all your invoices, you are stating the VAT on it, the VAT payable, that you have stated this is the amount for so product that I'm selling to you. Then at the end, put VAT at 7.5% and put it there as the last thing, and then add it to your invoice. If there is no VAT on your invoice that you are issuing to customers, if there's no VAT on the invoice you are collecting from your vendors, you cannot claim VAT input or say you are charging VAT for any customer or vendor. So by doing that, you'll be able to recover excess VAT payment from government using tax invoices. If you have paid VAT in excess, that is if you have VAT input in excess, you're able to recover them by using the tax invoice. So on the fifth guide, you'll be able to reduce taxes and grow your business. The fifth guide now. Okay, I want to go to my website. Mrs. Kenny, are you there, ma? Mrs. Kenny, ma? So I'm moving on. The fifth guide is that you should deal more with individuals on dutiable instruments. That is talking about stamp duty now. Avoid FRS, current enforcement, and huge stamp duty on back years. Deal more with individuals. When you are having dutiable instruments, make sure you are dealing more with individuals in this regard. What are dutiable instruments? These are instruments that will attract stamp duty. Instruments that attract stamp duty are called dutiable instruments. So I will give examples of dutiable instruments now, instruments that will attract stamp duty. I will give example of them now. For example, if you are having a deed of assignment, you are signing a contract note, you are having an insurance policy, you have a tenancy or lease agreement, you have bonds, you have contract agreement, you have loan agreement, all these are dutiable instruments. When you are having guarantors form for loan application from bank, when you are taking all these, they are all dutiable instruments. C of O, then joint venture agreement, power of attorney, all these are dutiable instruments which will attract stamp duty. So when you are dealing with dutiable instruments, try as much as possible to deal with individuals for detail like your rent and every other thing. Try to deal with the individuals. The reason is because as at now, the stamp duty for companies is collected, administered by FRS, Federal Revenue Service, while the one for individuals are collected by state government. As at now, as we speak, state government have not even started enforcing this stamp duty. It's only FRS that is enforcing stamp duty, because even state government don't even know how to go about this thing as at now. But the FRS has even set up a committee to go back 5 years and go and see, to do a bad duty assessment of stamp duty as we speak. So if you are able to deal more with individuals on dutiable instruments, be able to avoid some taxes on stamp duty, even especially for back duty assessments from on that. Guide 6, be consistent with tax payments and file returns to avoid best of judgment assessment. Be consistent with your tax payment. Make sure you are always paying your taxes. Make sure you are always filing returns. Whatever you think.
They have sent me. I want to review what they sent. Let me review what they sent so
Hello.
that the chairman can attend to it.
Be consistent with your tax payments and file returns to avoid best of judgment assessment. Make sure you are always filing taxes. Make sure you are always filing your returns. Make sure you are always paying your taxes at the right time, so that the government will not come and ask you to come and pay whatever they think is best for you to pay. That's what they call best of judgment. So if you are filing your tax at when due, you will not need to pay penalties. In most cases, penalties are more expensive than taxes. Somebody called me today and he said he want to get tax clearance certificate for his company. I said, when was the last time you filed taxes? You filed your returns? He said 2016 was when he started the business, and since then he has not filed any tax. I told him the amount of penalties that is even due for not filing at all is almost 300,000 naira. He said, why you cannot pay that? I said, that is the thing. When we tell you to go and file tax as at when due, even if you cannot pay money, file the returns first. Then you now talk about payment. There is no liability. There is no what do they call it? There is no penalty attached to non-payment as at now as we speak. But for not filing, the penalties are huge. So if you don't file the returns, you are going to you will have attached yourself. You will have invited much penalties on your company, and this will affect or hamper your growth, because more money will leave the company by the time you need to file all these returns. So the seventh guide is that you should pay yourself salaries or director's fee and file pay as you earn, payee as at when due. This one will help you to avoid personal income tax disputes. That is, we say you should pay your salaries, pay yourself salary. As the director of the company, pay yourself. Make sure you are getting your own salary, because if you don't pay yourself now, when the LRS or Lagos State or any other state government comes around, they will ask you to pay taxes on what they think is the amount of the director salary supposed to be taken. Then you now have to come and show them that I did not take that. So at that time, either you have paid your salary or not, you will now have to come and pay taxes on the salary you have not gotten. So you should pay yourself salary or director's fee and file payee of your staff every month. The due date for filing payee is 10th of the following month when you have deducted from the salaries of your staff. This one will help you. This guide will help you to avoid personal income tax disputes. When this one is the personal income tax dispute is always from the state government where your company is or your business is. When they come around, when there is dispute, there's no how you will not pay. There's no how you must have said you have done the right thing or not. It is not by mouth. Once you have, but you can avoid this by making sure you file the returns of your directors and of your staff as and when due. So guide 8, the 8th guide is you should locate your business in a tax-friendly zone. Locate your business in a tax-friendly zone. There are some zones there are some areas which are tax trade-free zone, which you can put your business in. There are some areas in Nigeria, even in Lagos here, and they term them trade-free zone. So once you are in such zones, you may not need to pay taxes. Another one is that you should follow up on withholding taxes. Withholding tax is very, very crucial to your business. Make sure that you deduct withholding taxes on every service that you enjoy from people. When they come to you, when anybody come and do anything in your company or your business, make sure that from their own workmanship or whatever, you deduct withholding taxes, either individuals or government. If you don't deduct it, you will pay with penalties and interest in the future. And then if it is a company, you also withhold some money from their fees. So firstly, for individuals, you pay the withholding tax to the state government, while the one for companies you pay the tax to the federal government. The one for individuals to the state government. So, and if you have rendered services to others, your company have rendered services to others, when they deduct withholding tax from your fees, ensure that you follow up and collect it. This one will help you. The credit you are going to collect from them will help you to be able to pay your taxes that is due in the future. That's another guide to reduce taxes. Then the last one which I will be mentioning is that you should follow up on your withholding VAT. Follow up on your withholding VAT. Don't lose your VAT credit. Offset your VAT liabilities via VAT recovery. Make sure that every VAT that has been taken from you, whether by, if you have anything you are doing with government or with any other people like multinationals, they usually withhold VAT from their vendors. Make sure you follow up and you collect the credit from them. This will help you to be able to offset your VAT liabilities in the future. Then, so the guides that we have mentioned so far will require you to require a conscious unlearning of the old practices. All the things we know and we think we know before, you try to unlearn them, because the Finance Act has come to change most of the things we have been doing in taxes. And this transitioning to help your company have lesser taxes to pay and consequently allow your business to grow. It is important that your company deploy adequate resources to understand the guides that we have enumerated and conduct an impact assessment on your business. This will enable you to have a clear compliance plan and make necessary adjustments that you need. We at LIABILITY Company, we are posed to help your company through the process of conducting this assessment of all the information that we are giving you and how you can adjust your business model to enable you to pay minimum taxes. We also do tax planning so that at the beginning of the year, you will come to your company and help you to arrange your business, check your budget, check your business model, and ensure that everything you are doing will make you to pay minimal taxes. You can contact us at any of our office, either online. We can check our website, www.shobantinternational.com. You can check us in our Abuja office or Lagos office. Our phone numbers and our email addresses is showing on your screen now. Thank you very much, and God bless you.
Thank you very much, Kike Lomo. Thank you for the insights. And there are many questions already, and more questions are likely to come. But the first one that is here, it says, where are the free zones in Lagos State? Where are the free zones in Lagos State?
You know, there is Lekki Free Trade Zone. The one at Aja, there's Lekki Free Trade Zone at Aja. So that one is known to everybody. That's where most of these Chinese companies are locating their business because they don't want to pay taxes. So the one that is very, very common that everybody knows about is that Lekki Free Trade Zone. Thank you. And there's some all over store. There are some also at other parts of the country. We have some in Delta states. We have some in some northern states. Some northern states have this very well.
Then they said somebody is saying that, it's asking what is the difference between WHT and VAT? What is the difference?
Okay, WHT and VAT, they are two different aspects of taxes. WHT is guided by the Company Income Tax Act, while the VAT is guided by the Value Added Tax Act. I will explain them. I hope you'll be able to get it. WHT is charged on services, while VAT is charged on mostly on products. They are for products and services that are vatable, we charge VAT. But for every contract of supplies, for every contract of services, you charge WHT. For instance, you give a contract out to a company to do some things, to do some work for you. By the time you are giving them, by the time they are issuing you their invoice, supposed to charge WHT. It's obvious that the other company will have charged you VAT while giving you their invoice. But when you are paying them, you're supposed to deduct withholding taxes from their fees. They will have added VAT to their fees. The supplier will add VAT to his fees, while the buyer, the person at the other end that is receiving the service, will charge WHT from the same service. So the VAT will be paid by the supplier, while WHT will be paid by the beneficiary or the buyer. That's how it works. So that's the difference between the two. So in both cases,
Thank you very much.
The two of them are being paid to the government, either state or local or the federal. Sorry.
Thank you very much. Thank you very much. One other difference is that when you are selling, you are the one that is selling, you are the one that will add VAT to the amount that you are selling. But the person who is paying you is the one that will make a deduction of the withholding tax, which could be either 5% or 10%. And it is a deduction in advance by the person who is paying you towards your company income tax. So it will be kept for you for company income tax. So when your income tax is calculated, you can use that amount to offset the company income tax. But VAT is not like that. VAT, you have to recoup if it is recoupable. If you don't have any, if you render services as I told you, you will not be able to recoup. And that means the VAT for that year is gone. So withholding tax and VAT, they are two different things. Withholding tax is a withdrawal from your payment at a particular rate, which could cause the satisfaction of income tax. Now, what is that one? Okay. Then they also ask this thing. Say, do agricultural businesses pay taxes? How about food processing like Gary? Do they pay taxes?
Okay, for agricultural businesses, the Finance Act has given them 8 years not to pay taxes. If you are a startup, you are just starting a business as an agricultural industry, you have first 3 years given to you as a tax incentive or what you do, or tax holiday. So after the first 3 years, you will now apply, they will give you another 5 years, because that is one of the things that the government just put out now for the agricultural concerns. So you have like 8 years for you not to pay taxes. After the 8 years, then you may not start paying taxes, because they expect you to have grown to the level that you may not need any other assistance from the government again. But for the first 8 years, you are free from company income taxes, education taxes, and the likes. Then food processing like Gary is part of exempt, VAT exempt products. So you are okay.
All right. Then another question is, how can I get FIRS to refund my withholding tax credit that is unused at the conclusion of my tax filing and tax payments?
Well, the issue of refund is a very crucial aspect in tax action in Nigeria. For other clients, you can get a refund, but in Nigeria, what we do in most cases is you will use that outstanding WHT credit to pay your subsequent taxes for subsequent years. That is, if you have outstanding, the one you cannot finish, you cannot use for now, then next year you can use it, or upper year you can use it to pay your taxes. But if it is so much now, companies are approaching the FRS now to claim refund of their withholding taxes, and some people are getting a headway and they are getting their money, but it is very, 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 it is somehow slim, but you can get it. You can get it. It's a matter of writing to the FRS and say you want to collect your money back. You can get it.
Yeah. Okay. They say the next question here, it says, what can one do if a government institution starts giving your company receipts for VAT deducted from payments?
Yes, if you don't have receipts, the FRS is online now. If you have your team, once they pay, you will see it in your platform. Once you log into your FRS platform, your own page, your own dashboard, you will see all the money that have been paid on your behalf there. So you don't even need to get a receipt again. No need for any receipt from anybody. You will know if they have paid or not by the time you log into your own dashboard on the FRS portal. So you don't even need that receipt at all from them, because everything is now online. You will get it online once they pay, to be uploaded to your dashboard. Then concerning training, we do trainings in our office. If you need training, you can contact us. We will definitely be ready to do that for you.
Yes. Then the other question now, it says, WHT, there are times when the amount is small compared to the effort to file. What do I do?
You have to do the effort. You have to go and do the effort, because that's what the law says. No matter, even sometimes there is even nothing to pay. Sometimes if there is nothing to pay, when you have nil returns, nil amount to file, need to file, just go and file nil returns. So many companies are filing nil returns. Nothing is there. That's why if your tax office where you are filing is far away, you can ask that they bring your file should be taken to the one that is closer to you. Or you can also file online. The online filing is getting very momentum now. I'm very sure by this time next year, nobody will be taking anything to government again that they want to file, to tax office again that they want to file any paper again. Everybody will be filing whatever they want to file online. So the state government have already completed their own. We are only waiting for FRS to complete their own. But as of now, people are already filing online and they are encouraging it so much. Most large companies are filing online. They don't need to go anywhere. So the effort to file will not be there. The issue of the effort to file will not be there once you are filing online. Thank you.
Then one question says, what happens when a company calls you to render service for them and they are also telling you that they do not have money to pay taxes on the job that they are giving to you?
Yes, there are instances when people say they cannot pay taxes separately from the service they are giving, from the service they are rendering. So the only thing you can do in this case is you can decide to take the job if you know you can pay the tax on their behalf. So, and if you know you cannot take it, you can leave it. But in most cases, in that case, when you think you need the job, you will take it and then you will pay the tax on behalf of the company. That's how it is.
So what she's saying is that if you look at you go to the supermarket, many of them, they don't put VAT separate there. The price includes the VAT. So when you are going to quote, you quote a price that will already include the VAT. And so when they give you the job, you deduct the tax, the VAT, and pay on their behalf to the government. But if you know it will not pay you by the time you pay that, then it means you will not take the job. Then somebody said our WHT credit is accumulating every year. What do we do?
If it's accumulating every year, I told us that once your WHT is accumulating, you can approach the FRS for a refund. If it's accumulating every year, approach the FRS for a refund. We can also help you in that, but we just charge some fee. We help you to do that.
Yeah. We have cases of companies that have hundreds of millions. Your may be a small one, hundreds of billions of withholding tax that have accumulated over 4 to 6, 7, 8, 10 years. And they are not located in one place. So they couldn't do it by themselves. We explained to them to do it. They couldn't do it by themselves. They asked us to do. And then, as Kike said, we had to charge them a small amount, and we had to send people to those agencies across the country. Some were even in Maiduguri, and we had to go there from our Abuja office to go and help them to collect. Then once somebody says, did I hear slammed or post evaluation of the taxes filed? Please clarify. I'm not sure you said that. Please explain that. Please explain.
Yeah.
There are no penalties for taxes slammed on the company post evaluation of the taxes filed.
No, there may be taxes that will be, if you have already filed, the FRS or the state government can come and say they want to check your books again and see whether you have filed the right tax. Assess yourself and say this amount I think I should pay as tax. So once you have assessed yourself and you have paid over, the government will still come and ask you to and check whether you have paid the right amount or not. So they can come and say, okay, you are supposed to pay 2 naira, you have paid 1 naira. So come and pay the balance of 1 naira. So that's why I said keeping of records is very, very important. If you have records to show that what they're asking you to pay is not correct, you have records that show that what you're supposed to pay is 1 naira, not 2 naira, then you will have been free from their hands. But if you don't have records to show, you may not be free. That's what I said.
Yes, and then if they have already checked your records after this thing and they checked your record, they found out that you didn't pay correctly, they will put a figure and they will put tax on it, they will put penalty. Then they will ask you to pay that amount. If you cannot pay that amount in one lump sum, you agree with them to pay instrumentally. But if you don't pay within that time that they ask you instrumentally, then they will charge you. If you don't comply with the agreement they signed with you to pay instrumentally within a particular time, they can still add tax. But if you pay installment, they will not add any other penalties on it. Okay. I think we have taken all the questions that we have here.